Hi everyone, this is Stillman, bringing you the second part in our Dojo education series on Fibonacci, the golden ratio, and its application in technical analysis. Since we covered the basics and the principles behind it in the last video, we can now start to look at how to apply all of that to your charting and eventually to your trading. Last time we left off with this little chart where we plotted the Fibonacci series of numbers against this price chart and hinted at the fact that price could actually expand in a way similar to the Fibonacci series. Okay, so we're going to look at 4 different ways to use the standard Fibonacci tool in TradingView on your charts today. One of them will be like high time frame orientation that allows us to identify levels through fib retracements. Next one is going to be golden pocket retracements that we apply to strong impulse moves. Those can go both sides, upwards and downward moves. And oftentimes the golden pocket, which is the 0.618 level, is going to provide us a good target for bounce plays. Next up will be range trading, and I'm going to give an example of a forex pairing to do that, because forex pairings are very prone to ranging, and actually are great hunting grounds for traders that specialize in that style. Lastly, we're going to look at fib extensions as a means to generate levels for events of price discovery, and this is pretty significant use of the tool. Since at the time of recording this video, the crypto markets are very close to entering price discovery again, this could be very useful in the future. So before we start off, let's take a look at the options for the Fibonacci tool that we got in TradingView. This is where you can customize the appearance and also the levels that it shows. Something that I like to do is extending the lines to the right. This actually basically gets rid of most of this, which is the coordinates panel right here, because since it's extended infinitely to the right, and you also got your levels showing up always on the right border of the screen, you don't have to mess around with this too much. I like to use one color for all of them, but you can also customize them. You can add your own Fibonacci levels to this, delete them, activate them as you require. I will show a couple of uses of that in templates that I prepared for my different uses of the fib tool. Finally, occasionally it might be useful to customize this, especially if you made, for example, on a low time frame, you applied fib tools, then it might just show up as blips and noise on the higher time frames. So maybe on the weekly and on the monthly, you want to deactivate that. High time frame levels. Let's get into it. We take these by spanning the fib tool from a pivot point to the next. And in the example I'm going to show you, this is going to be a market cycle low and a market cycle top. And the resulting fib levels are likely, at least that's our thesis, right, are likely going to cause reactions later. So the idea here is, by measuring that whole move that the price made during a market cycle, we can find levels that are going to be important in future price action. So this is Bitcoin chart on the Brave New Coin Index. I'm using this because it has a lot of price history. And the example I wanted to show you for this first application of the fib tool is going to start way down here in 2015. This is where that market cycle bottomed, right here in January. I'm going to use the fib tool right here. There you go. It's one of my favorites, as you can see. And I'm actually also going to apply the magnet, so it actually gives me the precise level when I hover over it. I don't want this to be off, especially since the data that I'm taking here is such a long range. So if we're off here, this could lead to errors later. Bear with me while I'm scrolling up here. There we are. That's the market cycle top in December 2017 at $19,764 here on the Brave New Coin Index. And this is how our fib span looks right now. And here are the retracement levels. So let's see if this, at this point in time, this is basically when, for the first time, we know, oh yeah, this is a significant level, this is a top. And then let's see if this is going to be useful in the future. So in this case, it doesn't give us the low, but it's just one way that we can apply this, right? But it gives us the resistance before the breakout from that capitulation range down here. It gives us that 7,700 level that acts as support and resistance a couple of times. It gives us the EQ, which is not a Fibonacci level, but which is usually applied on the Fib tool nonetheless. EQs of ranges like the 0.5, the exact middle, are oftentimes pretty important. Which you can see here, act as resistance, act as support, consolidation below right here after the March dump, support here, the golden entry for that long. And yeah, so this is basically the first way you can apply this, and I think it's really useful. And obviously we can mix it up with different other fibs to get to those other levels that might not be present right now. I might want to add that this is something that is most useful when it's used in confluence with other techniques, like marking monthly, weekly resistance levels, watching sentiment at key points. When you reach the fib levels, then you got potential divergences showing up on indicators at certain levels that you can watch out for. We're going to cover that in a separate series, and so on. Golden pocket retracements. So this is actually something that can be very useful in your daily trading and swing trading. And the idea is that after strong impulse moves, the correction oftentimes aims at a very specific target that we call the golden pocket. And coincidentally, that's the golden ratio on your Fib tool, the 0.618 level that we talked about so much in the first video. In a trending market, traders like to look for entries around those levels. Like you get a strong impulse move and it pulls back, and you want to enter that trend and participate. And it can be difficult if you have no orientation at all. You might fall in at the top, or you wait too long and the market just takes off without you. So that's where the 0.618 level, that golden pocket retracement, can be very useful. Let me show you that on a couple of charts right now. Okay, I'll start with the recent Ethereum Bitcoin pump. And in this case, I'm doing it on the 1 hour time frame. I marked that here. It was a very strong recovery. And I'm going to take the Fib tool, take this level down here. The low before, actually was a double bottom, the low before we took off, and the high. So what can we see here? We had the double bottom that happened on a strong bullish divergence, and it took off. And then we got our high, and those are the two data points that we have when we start to apply this. And now we're wondering, where is this going to go? Where can I find my entry? And here we are, the 0.618 level. That's our golden pocket. It shows up, provides a great reaction. We get a volume climax here too. Again, you know, as I mentioned, we want like confluence when we enter our trades. But you could actually bid this blindly with like a controlled stop where you calculate and define your risk. For example, when we get here, we have this low here, we could say, okay, I don't want to let price go below this, but I'll take my entry here. And that could actually be a great entry for a long right there. So we'll get rid of this real quick. We're just going to take that off the chart. And now I'd like to measure a different move, which is going to be the top to the bottom of our market cycle. Right here, start of the bear market, end of the bear market. And as you can see, we get the bounce out of the low from the bear market. And where does it stop? The golden pocket, 0.618. Same deal, the other direction. And we also, like from this standard fib tool setup, we also get a bunch of other levels that we could play on the way, right? We get that support level right here, which is resistance several times. We get another support here. Obviously, this will be difficult to play, but you can see that there are reactions. And then we have like consolidation here, which makes sense. This again, this 0.6618, this time pumps out of it. Hey, and here we have our current low as I'm recording this video, which is another fib level of that retracement I did here. So I think you're starting to see how this can be very useful. Now, if I like change the color coding on this, activate our other set of levels that we already had, this already gives us pretty nice high time frame Bitcoin chart that we could trade off. It's not, we don't have every significant level on here, but there's a bunch of them. And then if I just take like, you know, if I go to the monthly level and the fibs don't show up here, sorry. Let me do this real quick. We go to visibility, weeks and months, apply that. Same deal here. Now, let me go to the monthly level. Oops. And if I take like couple of monthly wick levels here, then we are already good to go. I think here, like nice monthly close, monthly open level. Do the same up here. Take this wick into account. Go back to the daily. And this could actually be a chart where you could have traded a lot of, you know, like a very, very significant time span off and find a lot of good entries and exit. Okay, now we'll move on to YFI. YFI USDT here on the Binance chart. And this will be another case of the golden pocket play on down moves. You remember on Ethereum BTC we had a strong move upwards. And here I'm measuring the moves downwards, starting here at the top that I marked already, down to the bottom, where we stall the 0.618 level. We correct from there. We take another one, stall down here. Where does this move stall? 0.618 level. Get rid of the larger lines. There you go. This looks a bit more, makes a bit more sense if we go to a lower time frame. And we already have like some nice range levels too that we could play if we are day trading. Okay. I think I'll cover one last upwards move on BTC and then we'll move on to the ranges. Get rid of these. Okay, the last upwards move is July 16, 2017. Oh yeah, this was a good example for a trending market that we would like to get into. Vicious dump here. I think that's like, that's pre-China FUD. This was like around SegWit, like the first SegWit debates, I think in 2017. And we got the rebound here, strong up move. Oh, how do we get into that market? We make a top. And there is our beautiful entry. Tip of the spear, 0.618 golden pocket. I think that's enough for this section. So let's go back to a presentation. Okay, so range trading is particularly interesting when there's no strong trend in either direction, but you would still like to extract value from the market in question. It's debatable if you want to do that or not. You could also look into other markets that are trending stronger, but some traders specialize in this particular style and master it, and they are actually looking for these trading for these ranging markets. Something that you can apply if you're looking for ranges is that they oftentimes occur after stronger high impulse, high velocity moves. Markets do tend to cool off then, to shake out late participants, to reaccumulate or to distribute. So that's basically when you can expect a range forming. Oftentimes, after strong impulse moves, these ranges will also narrow. So they would oscillate the highest. They have the highest oscillation range at the start, and then the range gets slightly narrower as the range goes on. We call this compression, and the compression would then later lead to the next expansion moves. So yeah, the idea here is that once we have a high and a low established, we can use the FIB tool to measure that range and to give us levels that could guide us in our range trading. As mentioned earlier, I prepared an example here out of the Forex world, which is euro trading against the British pound. We can already see this looks a bit different than the crypto charts we looked at earlier. There's a lot of ranging, high impulse moves too, but the ranges usually are pretty clean and are very, very, very good to play if that's your kind of style. The range I want to look at is actually this, where we have the high and the low established, and this would also be when we measure a range the first time. We are here, we get this bounce, it looks strong, and this is when we say, okay, this could actually be our range and apply the tool. What I found interesting is that with the techniques we discussed earlier, we could also arrive at that low. It's the 0.382 level, which if I hit reverse here on our fib tool, actually turns into the 0.618 from the other side. So we could, with our tools, after this high was set, if we wanted to like apply what we learned before in buying dips. Actually, I would have not bid this high just out of context, using what we discussed earlier, but it's interesting to see that this level showed up using our technique. Later though, we are missing out on a bunch of plays if we just do this. We get like 2 great entries here. We might sell, so we might hold through this. We might sell here. And then the frequency of our trades gets pretty low. And as the range gets, like the impulses get weaker, we also don't reach our TP areas. We still get good levels out of it. And again, here you would probably see some divergence. Yeah, here on Chris's indicator, the MHMI, you can see how the double bottom low, or even like the second lower low, is in that divergence with this indicator, and it would be very similar on an indicator like the RSI. So this would still give us good levels, but that's not what we want. We want a higher frequency of trades. So I'm taking this down to here. And now we got a couple more levels to play off. Obviously, our golden pocket play can apply again. I measured this move downwards, and it stalls the first time here, hitting the 0.618 level. That could be your first short entry after spanning this range and getting us going in our range trading efforts. The next one, like, we would cover the short probably down here. If we were more conservative, we would do it down here. And this would be where I would be looking for a long entry. And a reason for this is that price in ranges tends to spend the most time around the middle of the range and only very, very little time around the edges of the range. So basically, since there's so little time spent in the extremes, that's the moments we want to capitalize on. They will give the best risk-reward setups. I've got an indicator on this, which is the VPVR, which shows us how long the price spent in certain areas of our range, or rather how much volume has been traded there. And you can see here towards the top edge, the bottom edge, it gets very, very thin. So price won't give you many opportunities to trade these, but when they come, you usually do it. After this stop run kind of scenario, we could continue to trade our range, which is what I would do actually. And we get a couple of nice entries here. Get several TPs here in these areas. That's basically how you, like, a question of how you would define your trades, like the size of your positions, the size of your leverage, if you apply that, how far you need to go between these lines to make it worthwhile. But as you can see, we get several nice trades here. We might get stopped out occasionally, which does happen, but it's still very useful. After this happens, you could also say, okay, maybe I should expand my range to up here, which changes the levels quite a bit. And it won't be perfect, but you would still have a great edge over somebody that is just looking at all of this like this, right? Back to our presentation and the last section, which is fib extensions for price discovery. And as I mentioned earlier, this can be very, very useful in nascent markets, in markets that are in a very, very strong trend in one way or another and are approaching price discovery. And of course, you still want to have an edge above people that just look at that blindly. They just look at that chart. There are no historical levels. There has zero volume that has ever been traded at these price ranges. So how can we find orientation and levels that we can trade off. As I mentioned here, there are different ways of setting up your fib tool if you want to do that, and I will show you in our examples. Okay. What I wanted to look at here is Link USDT, one of the strongest trending coins in crypto over the last years. Right one. This looks better. Perfect. Okay, let's say we are in May 2019. Link just broke out for the first time, and we are wondering what's going to happen. First of all, of course, we are taking our golden pocket entry into Link because we like money. But we are most interested in what happens next, right? So what I did here is I measured the impulse of this first strong up move from the bottom to the top. And on the tool, as you can see, I have, as we move higher, I only have the full numbers and the 0.618 levels. And this is how that looks now that I hit reverse. Like if you would have took the measurement from top to bottom, you would not have to reverse it. This is just a function of me starting from down here to up here. What kind of levels do we get? So remember, we just took the data from here to here. We took our golden pocket entry before I hit reverse. This was the 0.618. And now we are looking to trade Link in the future. As you can see, the 3.618 is a very, very significant level here during the first blow off top of that small market cycle it's doing here. It overshoots it, but I'd say that with confluence, with like things like how parabolic is it, how is the sentiment, this line would have helped us taking profit. And at least it would have helped us taking profit on that rebound where it does like a small complacency shoulder on the smaller time frames after this blow off top. But even then, they're going down again, and the levels that we got from our small fib extension right here are still proving to be very significant. So this looks a little bit like what Bitcoin did during that period of time, but it's actually not at the same time, but it's a very, very typical shape. We got our support level here, that is a fib extension from what we took down there. It perfectly tests the top of that market cycle that we used to take our measurement from. Here it reacts from our level. Excuse me. Here in the future, it reacts from that 4.236 level, which actually I usually wouldn't have on there. I usually would use a different setup that doesn't have these smaller increments in there. This would be like kind of a lucky one, I guess. Shows you how the fib levels do show up in higher extensions though, not only the 0.618. Here we get a bounce from our 1 again, which is just the top of that cycle. It's not a lot of magic going on there. But then if we go, now that we go higher, we still get significant levels out of this. And that's pretty amazing if you think of it. So if I use an even more specialized fib setup for this, here in our templates where we can save them. Let me hit reverse again. So now this only has 0.618. There is not even like the full numbers in there anymore. But with what that allows me, one thing that allows for is to expand way higher consecutively with these 0.618 levels. So since I took like pretty old data, I'm still interested in how does this apply to our future chart. And as you can see, even now, like even so long ago into price discovery, this still gives us tradable levels. And that's how I will conclude this short presentation on how to apply the Fib tool on your charts and the principles of Fibonacci trading in your trading. I hope you found this useful, and of course, after watching this, please feel free to hit me up with any questions. Take care and bye-bye.